What is the latest on these trade negotiations?
Right. As we heard over the weekend,
When former President Donald Trump launched a fierce trade war against China, many believed the U.S. would emerge as the clear winner. Tariffs were slammed on billions worth of Chinese goods, American farmers were promised protection, and Washington spoke with thunder. But here's the twist. Years later, the numbers tell a very different story. Factories moved, markets shifted, and a quiet game of economic chess unfolded behind the scenes. Did Trump's bold gamble really pay off? Or did China, without firing a single shot, turn the tables? This isn't just about trade. It's about power, strategy, and who really controls the future of global economics. Let's break it down, because the truth may shock you. To understand the U.S. China tariff war, we need to rewind to early 2018. That's when President Donald Trump, frustrated with America's growing trade deficit and accusing China of unfair practices, decided it was time to fight back. The weapon? Tariffs. Heavy taxes on Chinese imports meant to punish Beijing and bring back American manufacturing. Trump argued that China had been cheating for decades, manipulating its currency, stealing intellectual property, and flooding U.S. markets with cheap goods. His administration framed the move as America First, a bold stand to reclaim economic control. In March 2018, the first round of tariffs hit $50 billion, 0 cents worth of Chinese products. And just like that, the world's two largest economies were locked in a trade war. China didn't stay silent. It quickly retaliated with its own tariffs on American soybeans, cars, and other key exports, directly targeting Trump's political base, U.S. farmers and industrial workers. What followed was a tit-for-tat escalation. By the end of 2019, hundreds of billions of dollars in goods were affected on both sides. But this wasn't just about goods crossing borders. It was about something deeper: economic dominance in the 21st century. Technology, energy, infrastructure, global influence, all became part of the battlefield. The U.S. blacklisted Chinese tech giants like Huawei. China doubled down on self-reliance and launched its Made in China 2025 strategy with renewed intensity. Meanwhile, global investors watched nervously. Markets dipped, supply chains trembled, companies scrambled to relocate factories to Vietnam, India, and Mexico to avoid tariffs altogether. The shockwaves were felt far beyond Washington. The trade war, in short, wasn't a spontaneous outburst. It was a calculated move in a long-brewing power struggle. And as both sides dug in, the world began to ask, who would blink first? Who could absorb the pain longer? And was the real cost far greater than anyone had imagined? Donald Trump's approach to China wasn't subtle. His strategy was built on one core belief: economic pain creates leverage. If he could make it costly enough for China to continue its trade practices, they'd be forced to come to the table on America's terms. And tariffs were his weapon of choice. Trump targeted a wide range of Chinese goods: electronics, machinery, steel, even household items like furniture and clothing. By the end of 2019, over $360 billion, 0 cents worth of Chinese imports were under U.S. tariffs, with rates as high as 25%. The goal? To make Chinese products more expensive in the U.S. market, giving American companies a chance to compete and forcing China to change its trade behavior. Trump believed that the U.S. economy was strong enough to withstand the fallout. Unemployment was low, Wall Street was surging, and confidence was high. In his eyes, this was the perfect moment to act aggressively. He bet that China, which relied heavily on exports to the U.S., couldn't endure the economic pain as long as America could. But this pressure campaign wasn't just about trade. It was political. Trump used the tariff war as a centerpiece of his 2020 re-election campaign, painting himself as the only president willing to take a stand against China. He frequently told rallies, "We're winning the trade war," and blamed previous administrations for being too soft. However, the strategy came with consequences. American importers had to pay the tariffs up front, and many passed those costs on to consumers. Prices on goods like washing machines, electronics, and raw materials rose. U.S. farmers were hit especially hard, losing access to China's massive agricultural market. The Trump administration ended up paying billions in subsidies to keep them afloat. Still, the White House maintained the pressure, hoping to force a comprehensive trade deal. In January 2020, the Phase 1 agreement was signed, with China pledging to buy more U.S. goods and strengthen intellectual property protections. But critics pointed out that enforcement mechanisms were weak, and China fell short on many promises. In the end, Trump's tariff strategy was bold and confrontational, but it sparked a global debate. Was it a stroke of economic genius or a costly gamble that disrupted markets without delivering lasting results? While Trump waged a loud and public tariff war, China responded in a very different way with strategic silence and long-term thinking. Beijing knew it couldn't win a shouting match with Washington, so it focused on resilience and retaliation in areas that hurt quietly but deeply. Instead of matching every U.S. tariff with equal bluster, China targeted politically sensitive American sectors. Soybeans, pork, and other agricultural exports were hit hard, directly affecting Midwestern states where Trump had strong support. This wasn't just about economics. It was a clever political move. At the same time, China doubled down on self-reliance. It ramped up investment in domestic manufacturing and tech innovation, accelerating its Made in China 2025 initiative. Chinese firms were encouraged to reduce their dependence on U.S. technology, leading to a nationwide push for semiconductor development, 5G expansion, and renewable energy dominance. China also expanded trade relations with other countries. Deals with Europe, Africa, and Southeast Asia helped offset some losses from U.S. tariffs. In 2020, China even overtook the U.S. as the EU's largest trading partner, a symbolic blow to Trump's economic war. Most importantly, China played the long game. It knew U.S. presidents change, but China's leadership remains for decades. While Trump fired tariff after tariff like cannonballs, Beijing absorbed the hits and patiently adjusted its sails. By the time the dust began to settle, China hadn't collapsed. In fact, its economy was recovering faster post-COVID than most Western nations. Manufacturing stayed strong, exports rebounded, and foreign investors kept pouring in. The world was beginning to ask, did China just survive the storm, or did it quietly win the first battle of a much bigger economic war? While the U.S. and China were locked in their tariff war, the rest of the world watched nervously, and then they felt the shockwaves. Global supply chains that had taken decades to build suddenly cracked under the pressure of tariffs and uncertainty. The impact wasn't just felt in Washington or Beijing. It rippled across continents. Manufacturers in Europe, Southeast Asia, and Latin America scrambled to adapt. Companies that relied on Chinese components for their U.S. exports had to find alternatives fast. Others relocated production to neutral countries like Vietnam, India, and Mexico, giving rise to what experts called the China Plus One strategy. Global trade patterns were reshaped almost overnight. Investors, too, were rattled. Stock markets dipped with every new tariff announcement. Uncertainty became the new normal. Many multinational corporations delayed investments or shifted focus entirely, avoiding both the U.S. and China to reduce risk exposure. American consumers also felt the pinch. Prices for everyday items from electronics to furniture went up. Meanwhile, U.S. farmers lost access to one of their biggest buyers. Even with government subsidies, many struggled to stay afloat. And then came COVID-19. The pandemic exposed just how fragile the global supply chain had become. With China as the world's manufacturing hub, lockdowns in Wuhan led to shortages everywhere, from car parts to face masks. The trade war had already stressed the system. The virus nearly broke it. Ironically, as nations scrambled to recover, China bounced back faster than most. While the U.S. economy wrestled with shutdowns and stimulus battles, China's factories were humming again, supplying the world. In the end, the tariff war didn't just reshape U.S.-China relations. It shook the foundations of globalization itself. So, who really won the Trump-China tariff war? On the surface, it might seem like a draw. Both sides suffered economic losses. Both claimed partial victories. The U.S. made a bold stand, forcing China to the negotiating table and highlighting long-ignored trade issues. China in turn survived the storm, pivoted smartly, and emerged even more self-reliant. But dig deeper, and a more subtle truth emerges. Trump's tariffs disrupted global trade but didn't dismantle China's rise. The Phase 1 deal, while symbolically significant, failed to deliver structural changes. China didn't stop its subsidies or its long-term industrial ambitions. If anything, it accelerated them, away from American influence. Meanwhile, the U.S. economy absorbed serious damage. Farmers were bailed out, manufacturers faced higher costs, consumers paid more, and while Trump left office declaring economic victory, many economists agree the war's costs far outweighed its gains. China, by contrast, played the long game. It used the chaos to strengthen internal markets, deepen ties with new trade partners, and position itself as a stable global supplier, even as the world around it stumbled. Perhaps the real winner isn't defined by short-term economic numbers, but by long-term positioning. And in that sense, China may have outmaneuvered the United States, not by fighting back loudly, but by evolving quietly. The trade war was just one chapter in a larger story, a story about shifting power, strategic patience, and the battle for global economic leadership in the 21st century. And if this was only round one, the world should brace itself, because the next round may not be fought with tariffs, but with technology, influence, and control over the future itself.